And now in business, the Nigerian stock market lost 2.18% last week after gaining 2.09% the week before. As a result of the performance, around 634.5 billion naira was taken out of the market as investors took a back seat. The all-share index ASI fell 2.18% from 54,085.30 points at the conclusion of last week to 52,908.24 index points for the week, while the market capitalization fell to 28.52 trillion naira. This brings the Nigerian stock market's month-to-date performance to minus 0.515%, with a year-to-date gain of 23.86%. A total turnover of 28.736 billion naira shares worth 209.060 billion naira in 23,688 deals was traded this week by investors on the floor of the exchange, in contrast to a total of 1.840 billion shares valued at 27.286 billion naira that exchanged hands last week in 27,273 deals. Just like in the previous week, the financial services industry, measured by volume, led the activity chart with 28.048 billion shares valued at 198.017 billion naira traded in 10,416 deals, thus contributing 97.61% and 94.72% to the total equity turnover volume and value, respectively. Joining me live on the news is Azeez Lawal, the Managing Director, Trustbanc Asset Management Limited. It's so good to have you, Azeez. So tell us, is the new MPR effect influencing or still affecting the market?
Yeah, good morning. Thank you for having me. We are still on MPR, that's 2 weeks after now, or 3 weeks thereabout. Yeah, I mean, across the markets, right, for fixed income and equity, particularly for fixed income, we saw the direct impact of the MPR. I mean, as soon as the news came into the market, I mean, we saw market players sold and significantly, basically taking their losses in anticipation of higher yields. But then now, what we are seeing now is that we are now seeing market players now being bullish on the market, buying significantly. Since yields are now up, also they are now taking advantage of those higher yields that were created from the initial sell down from the during the week of the announcement of the hike in MPR. As for equity markets, yeah, aside from the first day, which the market lost 1.82, we can't see the impact of MPR is still being felt in the equity market. So it's more of still influencing, maybe directly or indirectly, the fixed income market. But as for the equity markets, we can point to the fact that the MPR is still affecting that market. Thank you.
All right, now, aside the MPR, unlike last week, the market ended on a bearish note. What factors led to this, and what are your predictions for this week?
Yes, in your report, you said investors took a backseat, so that's what we've been saying. The market has really been quiet. Activity levels are very, very low. So as a result, it's more of, it's more of sell downs, really. Majority of the activities in the market is more of bearish positions, basically investors selling down. So we saw what played out Monday to Thursday. The market closed in a negative region, except on Friday, with a bit of bargain hunting. So exactly what played out last week, the bears may be weakened this week, but we still expect that the market will remain bearish. Thank you.
And what should we look forward to this week, especially in the fixed income market?
Yeah, for fixed income market, particularly looking at the current level of liquidity, the system is very buoyant in terms of liquidity, and typically it's liquidity that drives the fixed income market. So we expect that the markets will remain bullish, like it closed last week. So we expect that there will still be significant buy side activities across the curve, particularly as local banks continue to lock up their funds against possible CRR debits. Thank you.